How do you build an investment portfolio? It's the question in which I asked myself when I first started investing. Do I invest into stocks, ETFs, REITs, bonds, or a mixture of them all? What stocks should I invest into? Legacy stocks, growth stocks, value stocks, or most recently, meme stocks? What's the best strategy in which I should use? Should I cost average my way into the market, or should I lump sum invest? Or do I go down the route of day trading options? All of these questions are questions in which I had as an investing beginner, and I'm sure if you are new to investing, you're probably scratching your head thinking the exact same thing, especially now with a wealth of information online from a variety of different sources, which may not be the best investment advice for every single investor out there. We've got the meme stock phenomenon, and we've got investors trading with any amount of leverage in which they can get their hands on. And some of the founding investment principles seem like they're being lost over the course of the past couple of years, as investors are now starting to favor more high risk and high reward investments. So having said that, I thought it was probably best for me to just strip things back to basics and actually just show you guys my investment portfolio and exactly how I built it. I'll talk about the strategies in which I've used throughout different points in time, and I'll also talk about my own thought process as to why I made the investments in which I have. Now, I'm by no means an expert. What I did want to show you guys is just what a healthy, consistently growing portfolio looks like, rather than the one-hit wonder traders in which you see over on Wall Street Bets, which make tens of thousands of dollars in 1 month only to go and lose it all in the next. But before I do so, guys, my name is Mitch. I post all kinds of videos on investing and the stock market. If you do enjoy content like that, hit that big red subscribe button down below as well. Drop a like on the video, guys. Really helps out the channel. With that being said, let's dive straight into it. Now, I appreciate that not everybody's the same when it comes to investing, and everybody will have their own individual appetite for risk as well as investment objectives too, to which there is certainly no right or wrong answer, providing that you're comfortable with all of the investment decisions in which you've made. But to provide background on where I personally feel like I'm at as an investor, well, if you have the Wall Street Bets diamond-handed apes on the high-risk end of the spectrum, and you've got the king of value investing Warren Buffett at the other end of the spectrum, I'd probably say I'm roughly about in the middle. Or in other words, if I was in a casino at the roulette wheel, I'm the kind of guy that would rather put £10 on red or black to give myself a 50% chance of doubling my money, rather than putting £10 on a number with a 37-to-1 chance of making £370. Wherever possible, I look to put the odds in my favour, and the exact same approach goes to investing. Because look, like you guys, I work damn hard for my money, so because of that, I'm only ever going to look to invest into assets that give me a high probability of increasing the value of my money. And fundamentally, that's what investing is all about, making sure that you increase your wealth over time through making the right investment decisions and investing into the right assets. So how did I go about starting off an investment portfolio and growing it from £0 and 0 pence right the way up to roughly about £35,000 as of recording this video within the space of 3.5 years? Well, it all started off before I invested a single penny into the stock market when I was actually studying business and management over at university between the years 2014 to 2017. Every single day on my way into uni, I would read a book on investing on the train on my way there, which actually meant that I was able to read a total of 1 hour per day around the topic of investing just while I was at university alone. Now, during that time, one book that really stuck with me was a book written by Tony Robbins called Money Master the Game, which made me realize that inflation would erode my money if I didn't invest, because fundamentally money devalues over time. And the solution to prevent my money being eroded by inflation, albeit at the time I didn't exactly have much money driven by the fact that I was at university, but nonetheless the solution to that problem was to invest into something called the S&P 500, simply because the statistic read something like this. Over the past 100 years, the average annual rate of return of the S&P 500 has been roughly 9.8% per year. Now, to me, that completely sold it, because if I could increase my wealth by 9.8% per year, invest completely passively into an exchange-traded fund, if I was just able to invest the equivalent of £100 per week and achieve that annual average rate of return, after 25 years, I would be a millionaire. In essence, it was a fast track to early retirement, which was certainly a bizarre thought to think about, driven by the fact that I hadn't even started a full-time job at this point. So once I graduated from university, I started myself a graduate job, and with my very first payslip, I set up an automatic investing amount of £400 per month into my very first investment portfolio. The portfolio being one in which I opened with a broker called Vanguard UK, which is the largest mutual fund company in the world. I opened an account called a Stocks and Shares ISA, which allowed me to fund that account with an investing limit of £20,000 per year, absolutely tax-free. And I decided to take that £400 and split it up slightly and invest into 3 different funds. Those funds being an S&P 500 ETF, an 80% life strategy fund, and some investment grade bonds. Now, I quickly discovered that bonds certainly weren't the best way to go, and I did build up about £1,000 worth of bonds with a 15% return on investment before I actually looked to sell them during this year. But the S&P 500 and the 80% life strategy fund fund are two funds in which I very much hold on to this day. Now, to bring all of this to life for you, you can see that I literally started the investment account off with £400 and 5 pence on the 23rd of October 2017. And since then, I've slowly cost averaged my way into this investment portfolio, and as of right now, it currently sits at a total value of £16,942. And whilst it certainly looks like a steadily upward trending graph, throughout the course of this 3.5 years, there's certainly been peaks and troughs within this investment portfolio. If we go back to the very end of 2018, where there was a very slight market correction, you can see the portfolio was valued at £5,830 before actually declining to about £5,585, losing about £300 of its value. The very same thing happened again during September of 2019. If I just skip forward, you can see the total portfolio value of £10,755 actually went to drop off to £10,413, or roughly about £400 being wiped off the value of the portfolio. And that brings us to the most recent market dip, the March 2020 dip, where we saw the investment portfolio drop from £13,241 down to £11,590, wiping off roughly £1,600 of total value off of this portfolio. Now, after that point in time, I actually decided to stop investing into my Vanguard UK account. At the turn of the tax year, I decided to change my strategy and actually start investing into my Trading212 investment account and start investing into individual stocks, which we'll talk a little bit more about in just a few moments' time. But the important point in which I'm trying to illustrate here is, whilst I've seen peaks and troughs from this investment portfolio throughout the course of the past 3.5 years, over time, we've seen steady and healthy consistent returns, which you guys can see has now resulted in me having a portfolio valued just shy of £17,000, £4,500 of which is total unrealized profit right now, with a total rate of return of 57.51%, which, when we look at this from an annualized point of view, that's roughly about 19% per year, which I'm personally pretty satisfied with. But as I said, during the 2020-2021 tax year, I looked to alter my strategy and start investing on Trading212. Now, the mindset behind this was I had already diversified very well within my investment portfolio, having very much diversified funds with the S&P 500 and the 80% live strategy fund. But I certainly wanted to test myself and see whether I could actually outperform the S&P 500 through investing into individual stocks. It's certainly what the greats like Warren Buffett have been able to do successfully over the course of a long period of time, and as a result been able to generate a significant amount of wealth by doing so. So I thought, why not? I'm still young enough to take some risks, let's give it a shot. So as you guys can see, I've very much invested into a lot of high growth stocks, specifically in the tech space, with Apple, Tesla and Amazon being the three biggest holdings in which I have, and are all fairly equally weighted. I then have the likes of Facebook as a social media play, we've got Advanced Micro Devices as a semiconductor company, we've got Palantir Technologies, which are in the big data analytics space, we've got AstraZeneca, which are obviously a vaccine play, we've got Tattooed Chef, which are a vegan food manufacturer, and then finally we've got a few extra units of the S&P 500. Now, returns have been very volatile for this investment portfolio over the past 12 months. We've had peaks where the returns have been just shy of £3,000 to where we see now, after the big sell-off, especially across tech stocks throughout the course of the start of the year, we're now seeing portfolio growth of about 12.34%, a total return of £1,643. Now, as you guys can see, I have a current account value of £18,144, which is pretty crazy to think about because it's taken me just over a year to get this size of investment portfolio, whereas with my Vanguard UK portfolio, it took me just over 3.5 years in order to gain a £17,000 investment portfolio, which I've certainly got you guys to thank for that, because from the free shares in which I've been able to gain from obviously posting these videos and you guys signing up to Trading212 using the link down in the description below, I've managed to obtain quite a few £1,000s worth of free shares, which have obviously gone straight back into this investment portfolio. Now, you can obviously see I've got £3,223 worth of free funds, and that's from the most recent sale of a couple of stocks in which I've made. The first one being Ford Motor Company, where I profited £190 from that position, and the second being General Electric, where I managed to make a profit of £375. So I'm certainly on the lookout for the next stock in order to invest some of these free funds back into. So be sure to let me know down in the comment section, guys, what stock you think I should add to this investment portfolio. But for now, these are the top 8 stocks in which I'm actively investing into, and I plan to continue to invest more into these stocks and continue to grow the portfolio over time. Now, this investment portfolio is certainly not the best one out there, but it's also not the worst, and it's an investment portfolio that certainly very much aligns to my own personal risk appetite and my investment objectives. alternatives. And hopefully what I've been able to show you guys throughout the course of this video, that you can make sensible investments and still get a very healthy, consistent rate of return over the course of the long term. So with that said, guys, I hope you very much enjoyed looking at a real case study, a real investment portfolio. If you found value in this video, be sure to drop a like on it, subscribe to the channel if you're new around here, and with that being said, I'll see you over in the next video.